This is Damon Stevens with the North Builders. Today is Wednesday, July 6, 2022. And this is stock market update for trades of the day. And it was pretty well a flat day, although if you're a day trader, scalper, you definitely had lots of opportunities today. So let's get into it, see what's going on, see what we can possibly expect for the rest of this week as we go into Thursday. Looking at the market here, you can see the Dow Jones closed up 0.23%, NASDAQ up 0.35%, and S&P 500 up 0.36%. So pretty much overall flat. You can see kind of had a little bit of dip in the day, had some news come out, so there's a little bit of pump that happened today. Had FOMC meeting minutes come out, and then we had a little bit of a dump back kind of pretty much to even. So what does that mean for tomorrow? That's the question that we got to answer to figure out what's going to happen. It's just a pump and dump and we're going to come down further, or maybe we're just going to continue to stay in this little range that we've been in, because we've been pretty much close to flat for a while now. So let's get into it, take a look at it. But before we do that, you can see here that as far as our scanner, we didn't catch anything today on the scanner that would have told us, that we wanted to trade, at least for me. So we didn't do any trades on small caps or anything today. Looking at, here's the FOMC meeting minutes. So they came out, basically there was not like really any surprise that came out of there, but, it did create some volatility temporarily in the market, as you can see. But we'll see what kind of happens, in the rest of this week. We have initial jobless claims that'll happen, right before the market opens tomorrow. So that's possibly could affect the market a little bit. And then non-farm payrolls and unemployment rates on Friday. So definitely have some opportunities for volatility here in the marketplace, but does it move the market one way or the other? That's to be seen. So we'll take it, moment by moment as we watch this market. Looking at the S&P 500, the calls and puts. So the people short in the market, people long on the market using call options or stock options. So you can see here, the range is 370 to 410. Pretty much, this is the range where we have a lot of puts down here. You see the ratio is about 1.72 puts for every call that's out there. So more people, more bearish on the market, which makes sense. You can see here the stock price, at the close 383.61. Max Payne, this is, how does the market take back as much money as possible off these contracts? And that's if they can get the market to close out at 380 at the end of the week. That's how the market makes the most money and shuts out all these people who are investing in calls or puts in the market. So pretty close, not far to go to get there. So we'll see how the market ends up at the end of this week. So just something to be aware of if you're trading or you're trading options. Just to make sure that you're paying attention to that market and that kind of where we're at. Looking at the S&P 500, this is live. This is our futures. So this is going right now. And you see here, we hit a high of 38.75 for the day, a low of 38.11. See right here. So we basically went from our lower deviation bands all the way to our upper deviation bands, kind of pulled back here towards the center. And then we got it back above, through this evening so far. Looks like we got a little bit of a bounce here, looking probably for a retest at least of this high tomorrow. And if it doesn't reject, it's possible it could bounce up and go a little bit higher, maybe towards 38.90. But if it does reject here, then look, for a downside possibly to go back and retest these lows again. So looking for some direction, but right now things are looking more bullish than it is bearish. Google continues to do well, still sandwiched between the 50 and the 50-day moving average and the 20-day. So we really kind of get either a bounce above the 50-day or break below it back down into this candle here. So right now we could just be range bound possibly. You can see this area right here has been kind of an area of consolidation, also rejection too. You see we rejected off this level before, came back up, rejected again. So we're possibly coming up and hit it a third time. So see if we get resistance again, or if we get a breakout on the third chance. But right now, we've had two failures at this level here. Looking at Amazon on the daily chart, you can see here coming up towards kind of this high that we had before. We are above the 20-day moving average, kind of sandwiched between the 20 and the 50. Been there before, so we got rejected off the 50 before, came down, came back over the 20, got rejected, but now we're back in the 20 again. So do we get rejected again, or can we break above? Right now we're a little bit lower, so we got to break above the top of this candle here and get above the 50-day moving average here around the 119 or 119 would get us kind of above that, start breaking up towards new highs here. So on Amazon, Apple, nice bullish movement here, 3 days in a row, higher highs. So that's great. That's what we want to see. We're right at resistance. So you can see we got rejected before here, right at this level. So if we can break out and get above this 50-day again, you're seeing some commonality here. Get above the 50-day, 146, gives us a rally up. If not, we could possibly get a double top here in rejection. So got to watch the level in the morning to see kind of which way we're going. NVIDIA, nice little run up here. So we're still towards the bottom. We really got to break it, above our resistance levels here at 156. If we can get above 156, then we get in this next range here. But you see there's a lot of resistance here. So definitely be careful if you're trying to go long on here on NVIDIA. On Meta, you can see here we're right below that 20-day moving average. So we got to really break above, 170 to rally up here towards the 50-day moving average. So looking for a break above 170, or if we break back below, we could possibly retrace back down this candle. So keep an eye on that. Tesla, we're still in a downward trend here. Came up, try to test that 700 again. If we can get above 700 and hold candles above at least an hourly candle, we may be able to rally up here towards 720 to 760. If we get rejected off this 20-day again, possibly could come back down and retrace this candle, which could take us to 669 or even down to the bottom of this candle at 648. Definitely subscribe and like our videos. Now we can continue bringing this content to you, and definitely go out to finwealthlive.com. There you'll find a link to our Discord, which we post our numbers before the market opens so that you know what we're trading and what levels we're getting in and when we're getting out. Also, we have some free training out there at finwealthlive.com that you can check out as well. Look at the dollar, continues, we hit a new high again today, but pull back a little bit, and so we're now in this candle. So do we retrace this candle, or do we hold this and break up again for new highs again? Right now, dollars are elevated. It's not affected the market. You haven't seen that reflected yet, but you've seen it reflected obviously in gold, which we'll see here in a minute. So as dollar elevates, at some point this should have an impact if the dollar doesn't come back down, because it is very elevated, which means there's a lot of money out there in that area in cash. Looking at gold here on daily, you can see descended. We fell down here, down as low as we're down to the lower deviation bands. That's been support before. We're kind of holding there and consolidating down into 730 area. So we'll see if we can get some momentum built back up here, but something's got to change here in the market. With the dollar continue to be elevated, gold will probably continue to remain low. Looking at U.S. oil, we fell below that deviation, our deviation bands here, towards this 200, but you can see we kind of held at the bottom of this candle today. So we'll see if we can hold that. If not, we could possibly come down and revisit the 200 here at $69. So looking for support down there if it hits it. If not, maybe we can start to break up towards this candle, maybe get back up towards the highs again. Excuse me. VIX, you can see the VIX continue as we talk about in each video. The last several days, we just continue to chop through this wedge, getting tighter and tighter and tighter. We found support here, a few days here, and then a bounce, which brings the market down. A few days here, nice rally up for the market, and then a bounce and brought the market down again here, and now we're back down here again. So, do we stay down here a few days and then bounce off? If we do, market might be able to rally here if we can continue to come down here and touch this lower band, or even break it down to the 200. That'll help the market to move. If we do get a rejection here and bounce back up, then look for some down play on the market. Again, at the SPY, had a nice little spike today of almost a 386, very top of our deviation band, and then pull back here back into it, which is normal to see it. You'll see the stock a lot of times will spike up there and then it comes back down to settle. So this makes a great trading opportunity when you see this little spike here. If you can get in here On a short, definitely a good play if you're not taking it long. You see here we're consolidating, looking for a retest of this, possibly tomorrow. If we can hold this level we're at right now. If not, if we break back down to our support line down here and break it, we could come back and retest some of these lows down here on our lower deviation bands. SPY on a 1 day. So again, this was a 10-minute. This is 1 day chart, right below the 20-day moving average. Really got to give above 385 and hold it to start to rally up towards the 50-day moving average on a daily chart. Weekly chart, we talked about this, that we might retrace back down and tag the lower deviation band. You see that's been support, and we did that. So we really have had 4 days down here on this deviation band. So that's definitely a consolidation, but we closed up on this candle. So looking to see if we can retrace this candle possibly up towards 390. If not, if we get a rejection, we could come back down here and retest this again. But you can see, obviously, the trend is down. So we really need to kind of get a break out of here if we want to start moving S&P 500. Triple Qs sitting here right on our upper support line here, our trend line. So we're above the 20 days, so we could possibly break up here, maybe go towards 296. It will be resistance, so we could break back down. But looking for a bullish play possibly tomorrow. See if we can get a little bit out of the triple Qs. Looking at semiconductors, coming off the lows, it's tracing this candle back up. We got some resistance up here around 200. So looking for a break above 200 for semiconductors. If not, we break back down past 195, 194, we could come back down to new lows. IWM, so Russell 2000, this is your small caps. You see here we tagged the 20-day moving average, pull back here. We may retrace this candle down. We're close at the bottom towards the candle, so probably a little more bearish. We'll see. We got to really break above 174 and hold that to get a rally going on here. But you see we were rejected last time, we went up to the 20-day moving average. Financials, you can see we're just kind of consolidating here. So the last 3 days just kind of sitting here flat in the same range. So financials aren't really moving, and really need the financials to move too to help move the rest of the market. Looking at healthcare, just consolidating here under the 100-day moving average. So 1, 2, so over a week below here. So we got to break above 129.57 to start to rally back up here. So a lot of resistance right there. Need a catalyst of some point, news or something to get us moving. Looking at the energy sector, obviously, after hitting those highs, we've kind of pulled back here. We're at the 200-day moving average, which we talked about in our video, that's probably their destination, and that's kind of where we're sitting right now. So hopefully we'll find support here and eventually break up after we get some consolidation going on. But right now, without a catalyst, we're still kind of sitting here right at the lowest deviation band here, and also at the 200-day moving average. So if we break that, we'll be obviously moving over to a weekly chart, which is more bearish. Looking at Bitcoin, Bitcoin's trying to kind of rally up here. Still needs to get, it's kind of in this channel, and it's not above these last candles here. So it's got some work to do. We're below the 20-day moving average, so that's still weak. We very well could come up and hit that 20-day and continue to come down. Ethereum, same thing, under that 20-day moving average, coming in lower. So unless we break above that 20-day, you can see the 20 continues to move down, which means more likely our momentum's continue to come down on Ethereum as well. So crypto is still kind of suffering right now. So that's our stocks, our cryptos, things we're watching. Look at the levels we're looking at. Looking for a continuation play hopefully tomorrow on the bullish side, but we very well could see a pullback here because we did at the very end of the day. We had a nice little rally up and then pull back. So, with the news coming out in the next couple of days, definitely expect some volatility on the upside and downside. So be safe trading out there. If you're on long positions or you're getting into long positions, just keep your size, manageable, and just know that there's potential for us to come back and retest the lows. But if you're in it long, then great. If you're day trading, then just take advantage of those upper and lower deviation bands, and you can definitely get some profit off there. So you guys stay safe out there trading. We'll talk tomorrow night. see how your trades went and get a plan for Friday. So everybody have a great night. See you tomorrow.